You've done the markup, you see the zone, you're waiting for the move, and then boom, you enter. But price hasn't confirmed. There's no closure, there's no break of structure, there's no reason to be in. Yet, you're in. Listen, I've been there, I'd watched the market tap into my zone and convince myself that that was the one, only to get wicked out again. And the problem isn't your strategy, it's your discipline. And this video will fix that. We want to kind of look at the charts in a way that it's a story. Each candlestick's telling us something, each trend is telling us something, whether it be a bullish trend or whether it be a bearish trend. Now, what we want to look at is, remember in the last video when I said the trend lines are there to be liquidated for us to have the fuel for us to move to the upside? Well then, let's start by marking everything, breaking down a big problem to a smaller problem, and then a smaller one, and then a smaller one, up until we get to our zones. Now, we don't have to trade all the time. We can trade whenever price or the market presents itself to us. Other than that, you can not be on the charts. All you need is to make 1 or 2 trades per week, and you make a certain percentage, whether it be 2, 3, 4, 5% of your portfolio, and that's enough money to, well, make a living. And I can say this because I am doing this. Now, let's start by marking literally everything. So let's say this trend line over here is liquidity. Could you imagine how many people have their stop losses situated over here? You have people having stop losses from this, the beginning of the trend, and then from this, and then from this, and then from this. And it keeps on going, keep on extending this, right? But let's just keep this in mind. And let's read price action. Moving from a bearish trend to a bullish trend. Notice how this was the last range from this portion to this portion, and price was very much able to push after that. Now we had a break of structure over this one, which shows us that this is bullish momentum. But also this shows us that there's a lot of imbalance created at this portion over here. So what does this mean? This means you should wait, because now you have a couple narratives that are playing, but you have to kind of decide where you want to be in the market. So remember, this trend line has to be liquidated for at least the bearish trend to move to the downside, or if it's not, it could be our target. So you know that this is not a supply zone that is supposed to hold, simply because that push to the downside wasn't to change from a bullish trend to a bearish trend, but simply to cover this certain imbalance over here. Notice how if I cover the imbalance, now let's not refine and define since this is not a trade that we were going to be taking, but let's say from the last point of sellers to the first point of buyers, move it up. See, imbalance is covered, so buyers are still taking control and navigating throughout price action. So now that we know this push over here was probably to the middle of the trend line, we know that there's a lot more liquidity to be targeted. So what does price do? Price gives an entry, so tells you that, okay, we are now moving to a bearish trend, and then gives you a retracement, and then over here you would be telling yourself that you would want to sell. But in reality, you want to find a zone to buy to even a higher upside potential, simply because it only makes sense. And notice how we are only going to target the top of the trend line and then leave. Even if price were to reverse, even if price were to push through, whatever the case may be, we need to be having a specific target. Now, how do we go about this? We narrow it down. I'm going to stay on the 15-minute time frame for this video to kind of make it easier for everyone. And after you understand the narrative, in more videos and in the upcoming videos, I'll be going kind of more into detail. But for now, let's focus on what we have in front of us. Looking at this over here, we just need to remember, at this trend line, we want to target the liquidity. You know, this grabbed a little bit of liquidity, wasn't enough to kind of break the whole range, but now is having a pullback to the upside. So this is where we want to investigate and examine. Let's see. Over here, we were having lower lows, lower highs, lower lows, lower highs, moving forward up until this point over here. So let's go ahead and mark everything. Let's say for this portion over here, you have this break of structure being covered. So this would be our first marking for the zone. Boom. Break of structure. Now, when we have a break of structure with a body close over the last range, so let's all remind ourselves, lower high, lower low, lower high, lower low, lower high, lower low. Now it has switched. Now, when it has switched, showing us that the imbalance are being covered, it shows us that also buyers are stepping in the market, telling sellers, all right, we're going to take control from here on out. And here's what you got to do. Well, mark your range. When you have a break of structure to the upside, well, you know, you got to mark your demand zone. Now, if you were to mark this to be your demand zone, you got to refine it and see this is the imbalance over here. So let's look at this together. Over here, you would have this price gap left to be revisited more times than not. Not all the time it's going to be revisited, but when it does, this is our edge and this is when we want to execute. So here's what I'm going to do. I'm going to extend the demand zone and we're going to cover a bunch of things. We always want to never, ever, ever enter only because it's a FOMO or we're chasing a trade, or here you feel like the trade has gone, or here you feel like, oh, maybe this is the retest, maybe now I should go up. What is happening is very simple price action. Price had a push, had the break of structure, is now switching to bullish. And so what you see in front of us is you have a break of structure, and then you have a retracement, and then you have clear breaks of structures to the upside, revisiting an imbalance, and then creating a new higher high, which we will be targeting the top of the trend line over here. So like that. Keep in mind, this is the trade that we would want to happen. If that doesn't happen, we simply walk away. So again, here's what we have marked out. We have the break of structure over here, showing us that this demand zone is valid, showing us there's clear imbalance. So again, let's just mark everything out. Now that we have this one, so we call imbalance, we know that there is more price action over here, which is more liquidity. So let's also mark that. Let's just mark everything. So you see all this could be liquidity, like that. All of this one, boom, 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 boom. All this could be liquidity. We just extend it to see if what if price is trapping us more over, you know? So I'm going to let price play, and I'm going to show you where you could avoid having the silly entries and you chasing the trade entries, and you could kind of be able to kind of diversify between where you should be in a trade and where you should not be in a trade. So if I play this and we show price action, you could see that quickly what happens over here is that price gives a rejection from this point, then invites buyers in and then takes them out. So this is what would happen. For everyone that would be thinking that, oh, maybe this is the last push, maybe this is the demand zone that we should be in, here's what happens. Remember, it operates in ranges. The last range that we have is this portion over here. Now, what do we want? We want to know that before we come back to the extreme demand, we are in no place of authority to take a trade. It simply isn't very smart of us to do that. Now, here's what you can do. You can wait. And this is what I always advise, because once you see this rejection happen and then another push to the upside, you want to at least kind of see a break of structure over this candle over here, because this was the last lower high, lower low. Now, since we didn't get this over here and we saw clear price rejection, if you are in the trade, I advise you to please leave the trade, because it simply doesn't make any sense. Now, as soon as you see this, you can start kind of deleting and decluttering your charts, and you kind of move this one as well. And now you want to investigate even more. It looks like it tapped into the demand zone, but what do we want to do? We want to kind of go to the demand zone and refine from the wick to the wick. So top doesn't have a wick, be the body, and then this would be the bottom of the demand zone. You'd move it, it would be this candle. Now, if we look, we certainly did not have a tap into the demand zone. So here's what you want to do. Wait, always wait. Remember, we are targeting simple price action. We are waiting for the market to come to us. We are looking at the liquidity over here, because remember, notice how I extended this to remind myself that if I place a trade over here, even though the candlestick didn't close, I'm trading over the trendline liquidity. It simply doesn't make any sense, because at the end of the day, liquidity is the fuel of the market. This is why the market moves the way it moves. So after we can investigate and we can kind of refine the demand, we can see that we had no tap. Notice how I'm refining the demand on the place that I'm seeing where price action is happening, you know? If price action is happening on the 15 minute, I'm going to refine my demand on the 15 minute. Now, I can obviously lower my time frames, and I can get more confirmations, maybe get a more precise entry, but we'll leave this for another video. For this one, I just want you to focus with me and see how much more it makes sense if you simply wait. So I'm going to move this to 1x for the speed. And here's what we're going to do. Before we get a tap into the demand, I'm not in the trade. So I'm going to place a buy over here. I'm going to have my stop loss, maybe a little bit of breathing room, maybe like 5-6 pip stop loss is good. Here's what we're going to target. And extend this to the top of the trend line. Now you have a trade that makes complete and total sense. Let's recap the trade. You have a bearish trend that switched to a bullish trend. You have trendline liquidity, grabbed a little bit of the liquidity, filled out the imbalance instead of just breaking the structure and changing the whole range, comes back to the extreme that started the uptrend over here, because remember, we have price have an impulse, then we have price have a retracement, which is resting, and then we have price creates another higher high. And this is how the market is going to move. You have the impulse, you have price resting, you have price printing liquidity, You have price telling people you should enter, and then you have price taking everyone out, like so, gives you an entry, invites you, tells you, yo, come on, let's take more trades. Then you remember, and you say, Jay said, there's a trend line liquidity over here, we are not supposed to be in a trade, and it simply makes sense. Now, what are you targeting? The top of the trend. You don't care if it goes to higher than that, because this is what we want, so this would be the top of the trend. Always remember, you are in the market, moving with the trend, and leaving before it reverses. Let's just figure things out. Break of structure, imbalance, trend line liquidity, push to the upside. Now we are bullish. Makes sense for us to buy. Target a higher high. Now, 100,000%. Price could decide to come up, grab the liquidity of this trend line, and then continue to the downside. Price could also decide to have a small retest and then move back to the upside. Lucky us. We don't really care. As long as it meets our target, we are done, right? So this would be 24% trade. Now, this would happen maybe once a month, maybe twice a month. This is not going to happen always. But if you can kind of master having these kind of 2, 3, 4% trades during the month, maybe 2, 3, 4 times, well, you're going to be up 10% of your portfolio. This is going to make you a lot of money. The reason of me having a stop loss so minimal is very simple. I would want to take my losses quickly and take my profits slowly. So if price is telling you we are breaking structure, we are now moving to the downside, I would want to leave. I wouldn't want to be extending and saying, oh no, it's going to reverse now, it's going to reverse now, it's going to reverse now. I'd be risking so much money along the way. I'd rather be out very early. Why not? You could be wrong in the market, that's fine. But to be profitable, you should only be more right than wrong, and that is all. Now, if I play, I'm going to wait until we get the tap inside the demand. Okay, so we got the tap inside the demand. So we are now inside the trade, right? We're going to extend this, and then we're going to watch it play out. You're going to see that now it makes sense. See how we have another break of structure over here, and now we're kind of, we retest, fill out more imbalance, have more push to the upside. And it's going to keep happening on and on simply because this is how price moves. So if you're able to kind of wait and see exactly when the market is telling you to enter, this is where you want to be. Look, to your take profit, exactly. And then after we grab the liquidity, we now have a push to the downside. We could probably retest, come back up, we have more imbalance to fill, or we could go back up immediately. The most important part is we have already got our profit and we are waiting to leave. Notice how it just simply wicked out over our take profit because it simply wicked out the people that have their stop losses at the top of the trend line. And now notice how price is being choppy until either it breaks to the downside or back up to the upside. No matter what it does, we simply could not care less. Now, this is it for this video. I want to keep it as simple as possible. I want to make sure we don't overcomplicate things because they really aren't overcomplicated. If we can focus on this one model for now, you're going to be able to pass your funded account. You're going to be able to understand more price action. Remember, this is what we had. We had a trend line targeting the liquidity. We know that this bearish push is to cover the imbalance. We know that price has switched from a bearish trend to a bullish trend. We know that there was a break of structure over here and over here to validate the demand. There's imbalance. There's a trend line liquidity. Everything comes into play when you need it to be. But if you only wait for the market, remember, because if you were to extend the stop loss and this were to reverse, you would have been in a loss. If you were to take the trade from here, you would have been in a loss. If you were to take the trade before it taps into the demand, well, you would have waited probably like 2 more hours to maybe have this trade. But if you're able to be precise in the market and if you're able to focus on really and only what matters, you're going to be able to be successful in your trading career. Now, if you like this video, let me know. Also, if you have more topics you want me to discuss, also please do let me know. And as always, guys, I'll see you in the next one.